Hello and welcome to Let's Talk, a Mazars podcast about doing business in the time of COVID-19. In this series, we will hear from Mazars experts who've been helping clients navigate the business impact of coronavirus. They will tell us how their clients have been affected and what they've learned during the crisis, as well as how they have responded and what happens next. So, let's talk. Today's guests are cross-border financial advisors based in Poland who tell us about anti-crisis shields, restructuring for growth in Central and Eastern Europe, and the big decision Poland has to make about its future.
Hello, dzień dobry. I am Jacek Byrt, I am partner of Mazar in Poland, leading the local financial advisory practice.
Hello, dzień dobry. My name is Adam Zori and I'm executive manager at Mazar in Poland, and I coordinate the financial advisory services activities of Mazar within the Central and Eastern European region.
How have your clients been affected in recent months?
The start of the COVID-19 crisis saw our clients trying to reduce their costs and investments. Liquidity for clients in such sectors as automotive, hospitality and transport was the key concern. At the same time, they were looking for sources of external financing, mostly debt subsidies.
This was to tackle the disruption to the supply chain, which was hit by international trade limitations. And then, soon after, it was to help reshape companies in the face of lower, or at least different, customer demand. Customers changed their habits when they couldn't shop, or didn't want to.
How has the government responded in your local market?
In Poland, and similarly to what has been observed in most countries, the government stepped in with anti-crisis shields with 14% of national GDP put towards these initiatives. That's why at Mazars we focused on helping businesses qualify for such state help, and for those that were ineligible, helping them with alternative financing from banks, private equity and investment institutions.
Anti-crisis shields were driven by 5 key pillars. Ensure most jobs will be saved. Ensure there will be additional help to the medical system. Ensure the financial system will be reinforced and we can face COVID-19. Find ways for the recovery to be partly driven by public investment in infrastructure. New highways, central airport for example. And lastly, around company financing. A financial shield has been also implemented by the Polish Development Fund, Polski Fundusz Rozwoju. First ones to receive this help were small and mid-caps, then larger companies later, mostly due to the fact that the whole financial shield needed approval from the European Commission.
How has your team responded?
Mazars is trying to be present and active for its clients because the pool of help was fairly limited. As well as accessing government help, we supported lots of clients in adapting their strategies to the new market conditions. After they had sorted out their liquidity, some of them had to restructure their debt and review their growth strategy, looking at organic growth and external growth opportunities. And alongside reacting directly to COVID, we have continued with our work that is indirectly affected by the pandemic. In the recent Mazars report, Tax Traps and Structuring Opportunities, our experts in M&A tax services and international taxation looked at the tax risk threatening the success of the deal-making process in fast-growing CE markets and the success of the subsequent integration process.
Our experts found the main traps are related to the capitalization rules and use of tax losses. But these transactions can also benefit from several tax incentives, such as local incentives supporting investment and tax exemption applicable to mergers and demergers. Go to mazars.com for more. Our financial advisory teams are doing a lot of valuation work. EBITDA multiples tend to be now generally lower than during the pre-COVID period. Consequently, the appetite of potential buyers for acquiring high-quality assets in Poland and in CE could increase. If private equity funds had $2,600 billion to invest worldwide pre-COVID, a similar figure remains in their pockets to be invested when COVID fades away. One consequence of the crisis, which we touch in our COVID-19 and the World of Private Equity report published in June 2020, is related to the exit timings of mature companies from PE funds portfolios. Based on this Mazars survey, most PE funds expect to slightly delay the timing of their exit by 6 to 12 months, hoping to have a better return on investment.
Compared to countries in Western Europe and from a health point of view, CE appeared to have been relatively less affected by the virus during spring. Economically speaking, the countries most affected in the region have been those dependent on a particular sector, instance on the automotive sector or on hospitality and leisure.
What have you learned about yourself during the crisis?
COVID-19 helpfully pushes us to think about the fundamentals of how we do business in CE. In Poland, for instance, we have to look from two perspectives. This is either a place where people buy goods or where we make goods for Western Europe. The delayed supply chain the world saw a few months ago means people want production brought closer to home. Poland, with its long-standing textile industries, highway connections to Germany, and well-educated people, could gain with a much stronger position in this supply chain. We are already seeing clients trying to acquire companies in the area, a move that is only strengthened by recent news that Microsoft and Google are willing to make billion-dollar investments here.
COVID-19 is a catalyst for business change. The sooner a company will find its place and adapt to new realities, the better it will be for its growth. There will be a few winners in the crisis. The winners will be the ones that take the appropriate measures earlier. And for a lot of businesses, this efficiency will come through internal process improvement and looking for market opportunities and financing.
What's your advice to someone listening?
My advice would be to try to remain profitable and do not be over-leveraged. Think long-term. You have to be flexible and quickly adapt to the new market conditions. The future will be full of ups and downs, some related to COVID and some not. The key is keeping up with the changing world around you and ensure you are on the right side of that change.
Thanks for listening to Let's Talk, a podcast from Mazars about doing business in the time of COVID-19. If you have enjoyed this, you can find more by searching Mazars Let's Talk.